After the announcement of Adani Group going for 5G auctions, you might be confused whether to buy these telecom stocks or you should wait for the 5G auctions. All of your questions will be answered in this video related to the Bharti Airtel share. Hello everyone, my name is Mohit and this is a brief introduction about myself. Let's move to our main topic, that is fundamental analysis of Bharti Airtel share. We will be doing this by using 10 indicators checklist we use. Let's go to the checklist first. Let's see what is the checklist. So these are the 10 indicators I use to screen a stock whether it is a good or bad. First parameter is ROCE, second is net profit margin, third is dividend payout ratio, fourth is debt to equity ratio, fifth is sales growth, sixth is profit growth, seventh is cash from operations, and eighth is days working capital, and ninth is PEG ratio, 10th is business understanding. Do I understand the business of the company? So these are the 10 parameters, and we can read the financial statements also and some annual reports also. Let's start our analysis, and we will start with the ROCE ratio. ROCE ratio of the company is 12%. That is a decent ROCE for a capital intensive company. Let's see the trend of the ROCE in recent years. ROCE in last 4 years has improved from 3% to 12%. So it is a positive trend. And the main reason for the improvement of ROCE is the duopoly they have created in the telecom sector and the benefit they are getting from the tariff hikes in regular intervals. Let's check the second parameter, that is net profit margin in the latest quarter, that is 9.67%. This is also a decent net profit margin because company is very capital intensive. Let's see the third parameter, that is average dividend payout ratio in last 3 years. So this is 12% only as company was in loss for a long period, so the dividend payout is low. Fourth parameter is debt to equity. This is high, but they are managing their debt quite efficiently, but it is a negative point for my checklist. Sales growth is also not impressive. It is only 4.07% sales growth in last 5 years, but in last 1 year the sales growth is very high. And same goes with the profit growth in recent 1 year is quite high. Let's see the next parameter, that is cash flow from operations. Cash flow from operating activities, we can see that it is increasing year by year, and in financial year 2022 it is 55,000 crore. So this is a huge cash from operation. Let's see their breakup. So their net profit was, so their profit from operation was 58,000 crore, 639 crores. Let's see the cash from investing activities. The fixed asset purchased is about 27,400 crores. Only red flag is this amount. This is other investing items. This is 16,000 crore. And let's see the cash from financing activities. In this also, the red flag is this other financing activities, 10,000 crore. Let's see the next parameter, that is days working capital. So this is decreasing in last 3 years, so we can see it's a positive parameter for the company. PEG ratio we can check. So PEG ratio is very high and it is negative also because the growth rate was low. G factor is also not so impressive, it is 5 only. Let's see other parameters. The revenue breakup of the company is in the four subsections, that is revenue from mobile operations in India, that is 49.8%, and then they have revenue from Africa region, that is 25.8%. Then their Airtel business is contributing 12.9%, and homes business is contributing 2.1% revenue. And we can read the credit rating also of the company. CRISIL has given double A plus stable rating for long-term non-convertible debenture, and the reasoning for the rating, according to the CRISIL, their financial risk profile is healthy. Their EBITDA margin has improved. It has grown 26% year on year in last 9 months, and ARPU, average revenue per user, has improved. It was 163 in November quarter 2021, and now in June quarter 2022 it has improved to 178. So the revenue profile of the company is improving, and it is the highest in telecom industry. For Jio, ARPU is 167 in June quarter, and for VI it is 124 only. Another important news about the company is that Google has invested $1 billion in the company. Their market share in the telecom sector is 35%, and they are leading the Indian telecom market. Their ESG profile is good. So these are their strength, strong market position, and improving operating of performance of the domestic mobile telephone segment, healthy and diversified operations in Africa. We see their annual report, we can find their motto. This is customer obsessed, innovation driven. These are the highlights of the company of financial 2021. Customer base is 471.36 million users. In India they have 321.37 million users. Home service 3.07 million. Africa region 118.19 million users. Digital TV services 17.72 million users. These are the key services they have launched in recent year. These are Airtel IQ, Airtel Secure, Airtel IoT, Airtel Ads. This will boost their digital transformation. And they have conducted a 5G demo in Hyderabad. These are their vision, values, and objectives. Objectives are grow market share, grow revenue, drive down cost. So these objectives are quite good for long-term profitability. So they cover more than 24% of the world population. Let's read the financials of the company. Let's see the profit and loss account. Sales we can see. So the sales growth after 2020 is quite good, 18.82% and 15.83%. These are good numbers. Expenses remains constant, I guess. Operating profit remains good at 49%, and it has improved in recent years. And this year they became profitable after two consecutive years of loss. So the profit was around 4,255 crores. So if we see the trend of last 2 years, after they have created almost the duopoly, then the company's prospect is looking positive and good. Let's see their capital, how much capital they have. So fixed assets, they have almost about 2,45,799 crore. Market capitalization is around 3,64,000 crore. They have enough reserves, almost 63,000 crores. Borrowings is are quite high. I guess this is enough to analyze the stock, and now it is trending below the 200 DMA line and also 50 DMA line. Although the company is good, but this sector has some challenges because it is a capital intensive sector and there are no entry barriers. And other important factor is the regulations by governments. If government regulation changes, then it creates problem for the company. And if new players comes, like Adani has announced to go for the auctions, 5G auctions, this type of things will impact the business of the company. Technological advancements will cause more capital expenditures in future, like in 5G. they have to do huge capital expenditure. So overall the company is good and it is improving its profile, and it is a market leader in the telecom sector in India. And I would like to warn you guys that whatever example I'm taking in the video is just for educational purpose, and I'm not recommending anything to buy or sell. You take your decision based on your intellect or your analysis. This is just for analysis purpose. If you like the analysis, then you decide whether you should buy or not. And guys, next video will be on the hidden charges buying and selling of stocks, because many of the platforms like Zerodha provides zero brokerage, but they do not tell you other hidden charges that are involved. So if you want to know what are those hidden charges, do subscribe my channel and you'll get the notification for my next video that will be on hidden charges of buying and selling in stock market. I hope guys you like the video. If you really like the video, do hit the like button and share it with your friends, and don't forget to subscribe my channel and give your feedback in the comment section. If you like, you can suggest topic for next video or stock you want me to analyze in next video. Thank you very much guys for joining and watching the video.